Hey traders, Jason here from Leavitt Brothers. I hope you're well. I've been on the road the last 2 weeks, but now I'm back and I'm looking to get back into a routine, posting one, maybe two videos each week. In this video, I'm going to discuss a subtle change that may be taking place. Tech stocks have led the market. We know this. This is where our biggest gains have come from for the last few months. Most of the market's doing okay, holding up, but tech is where all the action has been. But this seems to be changing right now. Let's go through some relative strength charts, U.S. versus foreign stuff, and a lot of relative strength within the U.S., okay? So here, first of all, is the global. This is the global Dow versus the U.S. Dow. Okay, so it's just preference of foreign stocks over U.S. stocks. And you can see that very, very slowly over the last 2 months, global stocks have outperformed Dow stocks. And I can even, or I should say U.S. stocks, and I can even put like a resistance line in right here. We can see like a breakout here, came back into the pattern, and then it's continued up. And just earlier this week, we got a higher high, the highest level since early April. Okay, so there seems to be a preference for international stocks over U.S. stocks. And to drill down in this a little bit more, what I have here is I have the global Dow up here, and this is the U.S. Dow right here. Okay, so on the way up, there was an obvious higher high here, whereas we had a lower high over here. So the U.S. was definitely leading. And then on the way down, this drop is much bigger than this drop. So the U.S. did a bit better on the way up, and it held up better on the way down. But this seems to be changing. If you look at, this is the monthly chart going back 5 years. You can see the global Dow right now. Oops, you see the global Dow is up, as of this recording, is up 5.01%, and the U.S. Dow is up about 2%. Okay, but the global Dow has 42% of the global Dow is the U.S. So since the U.S. is doing worse than the global Dow, if you took this out of the holdings, this number over here would probably be like 5.5%. Okay, so there's definitely, and this is just a monthly chart, so this is just for like the current candle here. The global Dow is probably up greater than 5%, and the U.S. Dow is up like in the low 4% range. So there seems to be a shift towards traders, investors moving money to international stocks versus U.S. stocks. Okay, now let's look. Okay, now with that, here's a little bit more evidence of that. This is Chinese tech versus just U.S. tech. Okay, so this is the CQQQ versus the QQQ, which is the U.S. of course. So as you can see, Chinese tech has done much better than the U.S. tech over the last like 2 months. At Leavitt Brothers, we've played a lot of the Chinese tech names. A lot of them have been profiled on our trading ideas list, because you can see the relative strength chart hit its highest level since spring of last year. So it's been a year. Okay, so again, there's a shift out of U.S. tech and into some Chinese tech. Doesn't mean U.S. tech's doing bad. It just means China tech right now is doing a little bit better. Okay, within the U.S., we have growth versus value here. You can see growth is starting to underperform value. Okay, it's not it's not a big underperformance. It's not like the curve has gone down here and bounced and gotten rejected by its 50-day moving average, which kind of curled over here. So it's not a big underperformance. It hasn't lasted that long, but it's still an underperformance that needs to be noted. Okay, you can see it underperformed here, and let's look at what happened during that time. So here's the same chart up here. You can see where it underperformed right there. And during that time, the S&P rallied right here. The S&P rallied about 9.9%, and the Nasdaq only rallied 7.9%. Okay, so when growth underperforms value, the S&P does significantly better than the Nasdaq. Okay, so again, the Nasdaq still, if you see this here, the Nasdaq still moved up during this period. It just moved up a lot less than the S&P. Okay, so when value is preferred, money is shifting more into industrials, financials, and such, and the S&P does better. If you trade, leveraged ETFs, you might want to look at the leveraged S&P 500 ETF versus the leveraged tech ETF. Or if you're trading individual stocks, you want to look more into the S&P versus the Nasdaq. Okay, another comparison chart is the Nasdaq versus small caps. So again, we have a start. We have the start of an underperformance by the Nasdaq over the small caps. Okay, this is notable because the small caps have lagged big time over the last couple months. The Nasdaq has been, pressing to new highs week after week after week. So it's notable when we suddenly get a underperformance of the Nasdaq. It happened over here. Okay, so let's zoom in and see what happened during that time. So during that time, you have underperformance here, and the S&P moved up 15% during that time, and the Nasdaq only moved up 13%. Okay, still moved up 13%, which is really good. It just didn't move up as much as the S&P. So if we get another underperformance over here, we're going to want to look more at the S&P than at the Nasdaq. Here's another comparison chart: tech versus financials. Okay, tech starting to underperform. Financials have been really in the dumps, completely uninteresting. No reason to trade them at all. Too much money to be made in tech to even be bothered with financials. But tech is starting to underperform. It underperformed back here too. So let's look into that situation. Okay, when they underperformed back here, end of May. Again, this is the same as the last chart. Or two charts ago. S&P was up 15%, Nasdaq up 13%. Okay, so underperformance of the tech versus financials could lead to more money being made trading within the S&P than in the Nasdaq. Another comparison chart, and this is the Nasdaq versus the NYSE. Okay, Nasdaq underperformed here, and you have the S&P who did like 24.5% versus the Nasdaq only did 18%. You have an underperformance here where the S&P did 9.4% versus 6.6%. So we're starting to get an underperformance here. Now again, it's not a big underperformance. Okay, if it did this and came up here and got rejected by the moving average and kind of came down, then we'd have the actual start of a trend. But for now, we just have a period in time that could last a week. It could last 2 weeks. Maybe it grows, I don't know. But we're looking at a situation where we might want to look for different stocks instead of going back to those old reliable tech names that we've been trading over and over and over that have produced big gains, lots of volatility. We might want to look elsewhere, like financials, somewhere else. Okay, so to sum up, we have foreign stocks are doing better than U.S. stocks, Chinese tech better than U.S. tech. Growth is doing better than value. Small caps are doing better than large caps. Financials are doing better than tech. NYSE is doing better than the Nasdaq. Okay, doesn't mean the market overall is doing fine. It doesn't mean the trend is going to change. It doesn't mean the market's going to suddenly start trending down. It just means from a rotation standpoint, being stock pickers, and we have to pick and choose what we're going to trade. We're not mutual funds. We're not big hedge funds that have 50, 100 positions. We're all pretty small traders who are going to have a limited number of positions, so we want to make those positions really work for us. So what's happening here, the rotation that's happening here, tells us we might want to look more into small caps, more into value, and look away from tech a little bit because they are starting to lag. All right. So that's the situation right now. I need to do an update of my State of the Market series. I know I haven't done one of those in a couple weeks, but for now, just to kind of sum up, we need to start looking elsewhere, start to consider other things as trading candidates. All right, thanks for listening, and I will see you next time.